Hey guys, welcome back to the channel. January home sales were released earlier this morning, and I've been dropping nothing but real estate videos today. The one we're looking at is Compass Inc., ticker symbol COMP, and they actually have earnings tomorrow after the market close. So I thought it would be a great idea. Let's look at the chart. Let's look at the financial metrics. Let's see if the stock is priced reasonably or if there's room for it to go up or down. Also to see if institutions or hedge funds have been buying or selling. So looking at this chart, it's been a fall from grace, quite literally. The stock was as high as 22.17 and now it is stuck at 3.33. Does it deserve to be higher? Let's find out. The RSI on the monthly is actually going up. It was as low as 15, which is horrible. And right now it's at 35.82. So the stock price got as low as $1.95. We can see the momentum here is actually going up. Money flow is actually going up. Is the money from institutions or hedge funds? That's what we want to see. And the relative momentum is still pretty deep. So it's going up, but there's still a lot of headway that needs to be made, in my opinion. Looking at this, they are not profitable. However, they have around a 9% gross margin, which is okay. You would typically see that for really solid standard companies that have been around for a long time and offer dividends. For a newer company, not so great, but I mean, everyone has to start somewhere. This is absolutely terrible. Shares outstanding, dilution, shareholders are getting creamed if you're retail. Back in 2018, there was 393 million shares. 2022, there's 438 million shares. This is great. This ramp up, they made 880,000 back in 2018. 2022, they're at 6 billion. 6 billion 2022. We're in 2024 now. I don't know if they did not report 2023. This is going the wrong way. It's going down to the right. You can obviously see it get worse and worse. We're going to run through the numbers here. So we're going to run my calculation. I've explained this in a couple videos, but essentially I take the market cap 1,610 million, but they're losing, so they're not profitable. They're losing 395,700,000. Not good, not good. But they make 4,900 million. Good for them. All right, now we're going to go look at their cash and their debt just really quickly. Income statement, annual. Okay. So, I mean, look at this is a great progression back from 2016 all the way through 2022. Did they not release 2023 data? I'm so confused. Did they? Let's see if they have the quarterly. They did. Okay. Let's see fact set. So, okay. They're releasing Q4. I believe they're releasing Q4 data tomorrow morning or tomorrow after the close. So each quarter they make about 1 billion, which is insanity. That's good. Gross profit, not that. They're spending $1 billion to make $1.3 billion. Almost 1.1 billion. Gross margin's not that good, but I'll take that every day. I'll give if I could give you $1 and get $1.50 back, I'll do that. That's fine. But in terms of a growth company, not so great at the moment. But what we want to do is go to the balance sheet. Okay, so we're going back to our calculation. They have plus 220 million in cash. Good for them. Total debt is not a lot. It's only 27 million. That's awesome. Minus 27,900,000. Awesome. All right. And going up, back up to the shares float right here, the 362 divided by 362,480,000. $17 stock price. On the more aggressive side, I wonder if we let's try the more conservative just to be a little bit safe. What did I just do? Yes. Okay, so we have, I don't know if that was our, I thought we had a $6 billion number. We did, okay. So 6 billion plus the cash minus the 27 million debt, yep. Okay, that's what we want. So this divided by the 419,840,000, $15 to $17 stock price. That's pretty good. And the stock is at $3.30. The highest price target I see is $8, which is who's that by? Compass Point. Weird. And their name is Compass. What are institutions and hedge funds doing? COMP. And I just really quickly want to see what real estate services they offer. It's an online real estate platform, integrated suite of software for customer relationship management, CRM. Okay. Marketing, client service. Okay, so their involvement with new home sales, they probably have houses for sale, marketing real estate. Yeah, so that's pretty cool. Institutions and hedge funds, really quickly, jumping around again. Institutions own 40%. I'm going to say it's higher. Ooh, 64%. So that's a big jump in ownership right there. And it looks like it's at all-time high for institutional ownership. That's pretty good. Vanguard owns 51 million shares. Holy cow. SB Investments owns 102 million shares. Robert Refkin owns 28 million. Discovery Capital sold 23 million. That's crazy. So that's pretty cool. Their institutional ownership is near all-time highs. Yeah, I like this one. It's got a lot of shares outstanding though, so just a heads up. I kind of want to look at the website. Let's check out their website really quick. Let's see how cool it looks. I wonder if it's up to like the standards of Zillow or, yeah, I mean, it just really feels like Zillow right now. Look at that. Pretty cool. It definitely has the Zillow vibes. One of the stocks I'm going to be looking at next is Redfin. And you know what? This company looks to be in a much better spot than Redfin. I'll get there in a minute. But that's my final thoughts here. I think this stock has some potential, honestly. And this is something I would get into for risk reward. Obviously, this is awesome. This is not awesome. The increase of shares is not awesome. However, I think if the company can go from 880,000 in 2018 to 6 billion in 2022, that's pretty freaking crazy. That's like not almost a 10x. So in 4 years, would we see 6 billion turn to 60 billion? I don't know. Who's the CEO? The CBO is Robert Refkin. So, okay, the founder. I'm sorry, he's the founder. Robert Refkin. Why does that sound so familiar? How much did he sell? Robert sold... Oh no, he added shares. He owns 28 million shares. That's crazy. He sounds like... He sounds familiar. Well, good for him. I think he's got a good company on his hands if he can continue to grow. So I think the 9% gross margins are just temporary. I mean, look at the sales in the past 5 years, 72%. EPS year over year, trailing 12 months is almost 40%. Earnings per share this year, 50%. Next year, 54%. So, yeah, we'll see. We'll see what this one does tomorrow morning. I like this as a speculative play. Let me know your thoughts. Consider subscribing, hit the like, leave a comment. Tell me what you think. Dropping one more real estate video today just because January sales data came out. Hope you're doing well. Take care. Bye.